Good afternoon, ladies and gentlemen. Welcome to today's session. And welcome back after a good couple of days away. Or so I hope. If you give me a quick sound check, please. That would be great. And then we can get going. What the hell? You've been warned for capital letters. Honestly, my bot is a little bit tetchy sometimes, you know? It's a little bit tetchy. I'm not entirely sure what's going on. Maybe he woke up on the wrong side of the bed this morning or something. I like the enthusiasm, I have to say. I thought, well, hey, here we go. He's happy. He's excited. He's ready. And bang, that's exactly when the bot strikes. All right, well, it's good to see you all here. Like I said, hope you've had a good weekend, good time with your friends and your family, doing whatever you were up to. For me, it was a busy weekend. We ended up rescuing another guinea pig, so now we have 3. Honestly, this isn't turning into a trend. I'm not going to come every weekend on a Monday and say we've got another guinea pig. But honestly, guys, we went back to the pet shop to sort a couple of bits out. We used to get a couple of things, and there was a guinea pig in there, and he looked so depressed. And his brother had died at a very early age, and he had been left alone. And then the family who did own him returned him to the store because they didn't just want one pig. So he was there completely isolated and alone. He looked so sad. So yeah, me and Lucy, we were like, now we got to do something about this. So yeah, we came home with him as well. Honestly, the boys couldn't believe it. Parents go out every single day and come back with a fresh pig at this rate. Honestly, can't believe what's going on here. A petting zoo. Anyway, that was the highlight of our weekend. So this morning, we've had some pretty big things happen. So I'm not talking necessarily about too much in the FX market or the stocks necessarily, because we haven't seen too much of any drastic things happen. We have had a really nice run down here in the DAX today, which is great to see. Plentiful trading opportunities. The UK FTSE as well had a really nice run to the downside, and even our EU 50, which also did quite well to the downside. We're in a really nice state of equilibrium. It looks like we're going for a bit of a bull breakout now. Not that I'm going to be interested in trading this necessarily, but it's just good to see. It's really nice. And this was a little call from this morning. I actually posted this on X. Yeah, it played out nicely. I didn't actually take it. I didn't take it myself, but I was looking more at the structural form of the chart at the moment. Not necessarily trading it live, but really nice little move. And yeah, shame on me because I should have taken the damn thing, right? So that's that. But the big thing that's happened this morning, natural gas and UK Brent. The energy sector is dying. It is absolutely blowing up. Natural gas, look at that. A minus 6.09% sell-off as of now, currently stands. Now, natural gas moves are quite volatile. They are quite big, and that's why we like trading it, right? But this is pretty extreme, even by natural gas standards. The other one is UK Brent. Look at the size of the gap that took place over the weekend. We closed out at 75.989. We opened at 73.13, below all of the structural points. And then if that wasn't enough, it sort of 7:15 this morning, we got 2 big breaks of structure and it fell further down to 71.41. And this is over a 6% sell-off over the weekend. So we closed off right there. And then to the low, so from the open to the low. So this move in total is 6.1%. And we're currently down 5.7% of that 6.1% move lower. So it is extreme, a really huge move. We've got a floor in the market here at the moment, which is where it's having a little bit of a bounce. And this is definitely an area where I would think the market could very well start to take a bit of a turn and potentially come back to fill some of, at least, the gap. The gap is so significant on UK Brent, I actually do not foresee the market filling the entire gap in the short term. I think there will be a potential bounce from liquidity here. I think we will probably get potentially up to around 74, and then it will continue down in this downward trajectory. I mean, at the end of the day, we are still well within the bearish parameters here. This is still a bearish market, and so therefore that's it makes sense to see that continue. But I think a bounce from this area up and then back down, probably aiming for 69.50, for example, is the way forwards for UK Brent. This is geopolitically driven, with a number of the factors at play at the moment, the ones that we have previously discussed. But it's just extreme to see that kind of gap form. If we look at the some of the news here, like this one in particular, I did have a read of this already, guys, so this isn't like new information. Global demand forecasts were slightly reduced as well. Outlook continues to contend with macro risks, the National Bank said. In general, the oil market remains in a relative balance. This one here, global inventories remain stable, but slack is beginning to form, reflecting the fundamental backdrop for fading prices. It's not reflecting the geopolitical risks in terms of the war at present. And the reason it's not reflecting the geopolitical risks is because of what we said last week in terms of the fact that oil, I don't know what oil factories, I guess is the word, I don't really know the technical term, but they were not being targeted. Excuse me. They were not being targeted. So, yeah, I mean, just, yeah, it's big. It's really, really big to see something like this at the moment. So, interesting to see where oil goes from this point on. Yeah, just mental. So that's that. So let's have a look at the econ for this week then. So it's a relatively, as you can see, it's a relatively busy week, but I wouldn't say it's too busy with sort of consistent major events. This week, as you well know, is of course our non-farm week. We'll get down to that one in a moment. So it's a big one for that sake. Monday, we have nothing going on today at all. It's a slow start of the week. Tomorrow, we don't really have anything at all. We have the JOLTS job openings tomorrow afternoon at 2 p.m. But again, we're not really seeing too much there either. That's the only highlight of the day. And at the moment, we're looking extremely stable in our forecast, and I don't think there's any reason to suggest otherwise. You know, as US have consistently shown, it is a very, very stable employment market at the moment. Going down into Wednesday, the highlight of the day on the Wednesday is the EU's GDP growth rate, which will see the quarterly data and the annual data. We also have the US GDP growth rate as well, but the European ones is that's really the highlight of tomorrow. Apart from that, we don't have anything whatsoever. 12:30, okay, that's at night, so you know, here in the UK, that's bedtime for us. We do have the monthly CPI indicator for Aussie, which might be one for you guys if you are up and around at that time. You know, I know you guys try and follow the European and American trading sessions as best you can, but that one might be one for the Aussie there. I would expect probably to see some Asian session volatility as a result of that. But really, what we're looking at here to highlight the day on Wednesday is the GDP growth rates. Now, when I say highlight the day, you need to take that with a pinch of salt because honestly, guys, I don't see much of anything happening here. This is not really significant market impact that we're talking about. So now we've got Monday, Tuesday, and Wednesday with nothing going on. On Thursday, things start to heat up a bit. And we've got the EU's inflation rate, the annual inflation rate, and we have the US of A's core PCE price index, personal income, and spending, both monthly figures, all monthly figures, actually, on that note. So that's going to potentially cause a bit of a stir, especially in our US 30 Dow Jones and obviously the DXY. I don't think the DXY is going to be hit too hard unless we see something pretty incredible in terms of a shock impact. But generally speaking, our US 30 Dow Jones probably will be the number one asset to be considering when this comes out. So obviously this week, it's that weird 2 week period where UK's gone back, US hasn't. So there's now the weird delay in the times here. So 12:30 is going to be the one. 1:30 is now the open in the UK. So looking at this at the moment, then that's going to be the real highlight of the Thursday, and that's going to be done and dusted in the space of a half an hour. And then finally on Friday we get to the real crux of it, which is of course the non-farm payroll event. So we have the non-farm payrolls, the unemployment rate, average hourly earnings, and of course the ISM manufacturing PMIs, which are a couple of hours later. And that's really where the action is going to happen this week. So there's a lot of news coming out, as you can see here, just taking a quick glance. Of course, we have the BOJ interest rate decision at 3 a.m. on Thursday, but that's nothing to talk about there, to be honest with you. Same old. But actually, in terms of actual market impact, fundamental drivers this week, it's going to be slow, guys. It's going to be real slow. The next week, however, is going to be good, because how far forwards can I go on the calendar? So keep going. I only want to look at that. Thank you very much. That makes things a lot easier. Okay, so next week, let me just check the dates here quickly. So next week's commencing the 4th. Or the 5th, actually, beg your pardon. So on the Tuesday the 5th, we will have trade balance coming out for the CAD, ISM non-manufacturing PMIs. On the Wednesday, we will have the Ivy PMIs for the CAD. On the Thursday, we have the BOE, bank rate and interest rate decision. And we also have the federal funds target rate at 7 p.m. in the evening. And then after that, we have the participation rate and unemployment rate for the CAD. And then we have, actually, no, that's not going to be viable for you guys. So that doesn't really matter, actually, that one. So yeah, we've got a bit of a better, I don't know, is that a better week, actually, guys? I don't know if it is. Is it the next week I'm thinking of when we have all the big ones? So then we have ZEW, CPIs. Yeah, then we have CPI Wednesday for the US. Then the unemployment rate, GDPs. Yeah, so it's actually going to be the following week where we have the US CPI. I thought that was next week, so I do apologize for that. Yes, actually, unfortunately, team, we've got about 2 weeks of slowness from the fundamental side of things. Really, really slow. So we're just going to have to rely on some good old-fashioned TA, basically, for the next up-and-coming couple of weeks, which is fine. But, I do like the fundamentals because at the end of the day, they do drive the markets. So we are going to be having to rely purely on what's going on naturally to get these markets going. So looking at the sectors then, the sectors are looking at a big wall of red. The finance sector, the ETs, the tech services sector is probably the only one a bit balanced out because of Microsoft, which is showing a 2.64% gain so far. We do have Now as well at 3.24% up, Netflix 2.3%, PLTR as well 6.77%, which is a big one. But generally speaking, I mean, the sector itself is down. IBM's down 7.44%, which is pretty damn bad. The energy sector, utilities as well, really not doing well. Energy minerals down, utilities down. Finance, look at the finance sector. It's absolutely slapped at the moment. It's terrible. Health tech as well is absolutely crushed. Consumer services and commercial services both getting slapped. It's a bad time out there at the moment for the US stocks, definitely. I mean, the UK's, it's not performing any better, to be honest with you. It's pretty bad overall. So yeah, it's not going well. Not a good start to the week. If we go down here, we change things up. Yeah, so there's your UK view at the moment. UK's getting absolutely slapped as well. Energy, minerals, health tech, finance sector is getting destroyed. Look at Lloyd's Banks down 10%, and that's just to get the week off to a start. Retail trades getting slapped as well. Distribution services down, producer manufacturing. It's all getting really, really dicey. Non-energy minerals up here. AAL's up 3.46% with a 3.2% in ADD, and that one's, yeah, they're all right, but the rest of the sector is not looking great. It's kind of at a break-even point, I would say, that one at the moment to get the week off. But everything else looking real bad. If we just check out the Aussie 200. So again, I mean, Aussie 200, the T services up here, tech services, that's actually not too bad. That's probably one of the best performing sectors in a country that we've seen here this morning, right? It's quite sort of balanced, I would say. NXT is down 4.9, but we've got WTC up at 7.32, which is a good one. SEX up 1.76. We've got Hub at 1.24. This one up here as well. So this isn't doing too bad. Nuix Limited at the moment, 6.86. It's on a bit of a nice incline, which isn't too bad at all. So generally speaking, that's doing okay. But the rest of it is getting absolutely slapped. Finance around the world, people are just having enough, aren't they? It's terrible out there at the moment. You can just see all of the ETFs that have got so many of these conjoined stocks from all over the world in the ETFs. The ETFs are probably in a huge bearish trend at the moment. Just looking at these numbers, they're pretty bad. Down here as well, non-energy minerals. Obviously, Australia's got a lot more of those than naturally the S&P does, and the UK FTSE. And at the moment, it's doing terrible. Look at them, 15% down. That's really pushing it. I mean, that's probably one of the top losers that we've seen so far out of the major ones, out of the major cap stocks. Minus 13.22% in Min as well. Minus 6.42 in JHX. It's a tough time. It's a really, really tough time. We see this bleeding out across the whole world as well. This isn't just one country which is under the hammer at the moment. We're really seeing this sort of blow up. We look at the Russell 3000. For those of you who are unaware, the Russell Index are low cap stocks. So they're stocks that don't make it to the S&P. They can get shoved in the Russell. And if anything outperforms in the Russell, it then moves up to one of the larger indices. So even this, look at the finance sector in the Russell 3000. I mean, my God, it is a sorry state of affairs, isn't it? If we take any of these at the moment, we are looking at downturns all over the place. So, yeah, it's a tough time. It's a really, really tough time out there. Equities at the moment are getting bombed. The good thing about this, though, if you do have any interest in trading equities, is the fact, or ETFs for that matter, guys, is the fact that these big downturns often are hit with nice bumps. So every time it bounces, you can get sort of intraday spurts, maybe 2, 3, 4 days of buying sentiment switchovers, so they can jump in and take a few bids. Rally up maybe 200-300 points, get yourself in a stock that's no more than $3, $4, $5 a share. You get a few of them, buy as many as you can, I suppose. And then just set out short term. You're not going to be stung by too many of the swaps, the rollovers, and that. You're going to be done and dusted quite quickly, and you can make a pretty good packet quite quickly. So, I mean, even apps. I don't want to get into the realms of services recommendations on the streams here, but even companies like Trading 212. I mean, Trading 212 started out as they tried to go commercial, and it just didn't work for them back in the day, but now they've gone much more consumer and retail friendly, and their app is actually pretty good. I mean, I even recommended it to Lucy. She doesn't really have too many She doesn't really have a background in any of this stuff. She uses me for it. But she's been utilizing that, and she's been getting on well. It's good and user friendly app. Obviously, if you do know what you're doing, then IBKR hands down is, in my humble opinion, the best platform you will see out there. But that takes experience. That takes a bit of an additional skill set to be able to utilize that. So Trading 212 is great, and they offer fractional share buying, which is another great thing as well. Because if you want to buy into Tesla, but you don't want to have to pay bloody however much it is per share, what is it trading at the moment? 269. So if you don't want to buy in at 269 quid a share, then you're going to be able to buy fractional shares and buy chunks of it, and still make a decent profit. So anyway, that's a little bit of an equities breakdown there for you guys. Wanted to just include that as, frankly, the economic calendar was so boring. I wanted to give you guys something that you could probably get your teeth stuck into in your own time, a little bit of an additional activity. Looking at the FX market then, so far, we'll look at the daily change. No point looking at the rest of it yet, it's a bit early. So our Japanese yens are trading lower against most other currencies at the moment. Yen against the euro, pound, NZD, Swiss, Oz, CAD, all trading lower at the moment. So the yen's been on the back foot at the beginning of this week. As we go down here, we're seeing a sort of little bit of a balancing act here with the US, not with the US, sorry, with the Swiss. So Swiss NZD, euro, dollar, CAD, it's kind of just balancing out at the moment. We're not really seeing too much of a significant loss against any of the currencies. It's a bit of a sort of break-even currency at the moment. As we go up the scale, we start to see more of an incline in things like the Australian dollar against its opposing currencies, which is doing okay at the moment, starting to get a little bit of a bid as things start to ramp up. As we go further down, we can see the NZD is doing quite well actually as well. The pound is actually performing quite well against opposing currencies at the moment. And as we get right to the bottom, it is actually down here, the pound and the NZD, they are really at the top of the leaderboard. The Australian dollar is doing okay, but the NZD is really doing well there. So that's not too bad. The NZD JPY, pound JPY, euro JPY. Now you could argue that this is just because the yen's really weak at the moment, but I think if we look at the relationship between the other pairs, the pound against the dollar, for example, is 0.22. 0.22% up at the moment. Pound against the CAD is 0.21% up at the moment. Pound against the yen 0.39. So it is doing okay. It's actually doing all right. So it might be worth checking out the pound pairs, I think, to begin with, and we can see where we're at with some of them. So let's get down here. Yeah, so problem is with a lot of these pound pairs, actually pound CAD looks like it could be on the hot list. I don't think the pound against the Oz though, because we're coming right into big liquidity up here at the moment, aren't we? So we've got that ceiling of the GA, which is quite a big one. We've had some fake outs for sure. This was in the August chain liquidation event, so I'm going to disallow that. That's not in the analysis. But these highs in here will be, and so that's probably going to run into a bit of trouble soon. Pound against the CAD certainly looks like it could have legs, because that's where we're trading at the moment. We've got a clean breakout of liquidity there. We've got the ceiling up there at around 181. We're currently trading at 180.40. That's a good 60-70 pip margin between where we are at the moment and where price could probably easily traverse to. So I'm definitely I want to check out that pound CAD. Pound Swiss looks bloody awful at the moment, so I don't want to check that one out at all. Pound against the yen, guys. Look at this one. It's down on the daily at the moment. The gap up was pretty nice. We got this big gap up here, closed at 197.47, opened up at 198.70. So I mean, that is a big gap up, isn't it? If we stretch that out, that's not a small gap. We've come down with an attempt to fill some of the gap, but failed to do so far. It did actually rally upon the open as well, so it opened up and just continued rising. So I should imagine if you were to check that out last night, you probably would have seen the pound yen almost 1% up over the previous week. Looking at where we are at the moment, though, guys, I've got to be honest, it's not exactly full of trading opportunity in here. I would say that. Yeah, it doesn't look too good for trading right now, but maybe soon enough. And what about cable? What's that doing at the moment? Yeah, so that was really nice. 5:45 in the morning. Great rally to the previous highs. We need to remove this now. This is old news. So, okay, that's cool. I think the pound CAD out of those looks the best. We'll come down to that one in a minute. So let's have a look then. So of course we have oil down 5.9%, and it is sort of cruising at around that level at the moment. I think the first thing for UK Brent is to say buyback opportunity. That's the first thing I want to think. That's the first thing I want to say. Market's been down here before. We've seen institutional buying power enter the market time and time again. It's come down, it's risen, it's come down, it's risen. And so therefore I cannot help but think that the same thing is going to happen again once we dig our feet into into around 71, for example. So I would be thinking about buyback opportunities coming up, maybe hitting the median of this trend, which I've got to be honest, I might delete altogether now. It just doesn't really make sense to have it in the chart anymore. So I'm just going to go through quickly, individually delete these areas. So let's say, for example, we get our feet stuck into 71. That's going to be about there. We start to see the buyback. We look at the breaker structure point, which is going to be at this area in here, which basically where the price line is at the moment. So we get that breaker structure and then we rally up. Where do we want to take the market to? Because the floor is all of these lows. That's where the floor is. We've got this fake out in here, which didn't last. And then we break, close, retest, double retest the floor, the same floor that we were using previously. Then we get the push up, and that's where the market's been sort of range bound ever since. So I think if I'm looking for a buyback opportunity, I'm not necessarily going to look for this area in here at the tops. I'm actually going to look for the floor above that, and that floor is situated at around 73, 73. I expect oil to rally back to 74, but 73, 73 is where I'm going to target a trade, and that's pretty much it. So just going to wrap up a zone in there, in that area. That's nicely in the gap, and then I'll be looking to take that trade back. So then we got the break of structure wherever that's going to be. We don't exactly know at the moment, or maybe we do. Yes, do we have access to that information? Yes, we do. So that's going to be about there. Stop loss for this one's going to be about there, and that's going to be a 1 to 2.27 trade in Brent. Now there is short there is there, or is there not actually? I don't know if there is actually capacity for a short. 69.53. I'm gonna leave the short for the time being. Not that I'm saying it's impossible for UK Brent to trade lower. Of course I'm not. But I am going to leave the short bias temporarily at least and see where that one ends up going. We can check that out obviously tomorrow, see where we're at. But for this stage, yeah, it's going to be a long only on UK Brent. So gold, up to or down to gold. Gold at the moment, range bound still. We had a big week of it last week, Friday, Thursday, had a nice move on Wednesday. But then it just was kind of back to Monday, Tuesday, which was basically making it nowhere. It is still in that state structure. I cannot even say that this is a decent area of equilibrium, and that institutional liquidity is starting to flow into the market here. I'm just not sure about it. It's cruising along sideways at the moment. We have a ceiling and a floor roughly that we can look at. So roughly the ceiling and roughly the floor. It's not perfect by any stretch of the imagination, but you can use it. So if this is your trading margin, you're treating this like a range. Wait for the push up into liquidity and rejection of with a breaker structure, or look at the buyback down from the lows with this break of structure from these 2 points. Okay, and then that's going to be your long access to 27.44 again. There's no point putting the trade panels out on this one. I am going to be actively trading gold from both these points. You're looking at approximately 1 to 2.3 risk reward ratios on either side of the market. Your breaker structure elements are very, very clear. So for one, the short breaker structure point is going to be there, and for two, the long breaker structure point is going to be about there. So breaker structure, stops below the structural points on both sides of the market. And remember, guys, you're not taking the trade to this area or this area, you are taking it up to the points of liquidity, not the breaker structure points. So that's going to be a split blue. Let me just check if there's any questions or anything. Hey, good morning, Scotty. Good to see you, mate. Will the US election have a big impact? Will it have a big impact? It bloody well will. Yes, the US election will have it will have a big impact, Nadia. I mean, we've been talking about this, haven't we, for the months running up to this point. I am incredibly surprised at how, should I say, how calm the markets have been up until this point. I really have. I just find it really strange. And I think it's because of previous experience that I find it really strange. I mean, we all went through it together. Not you in particular, Nadia. And Scotty, I mean, you did, mate. I'm sure you did, to be fair. And Braden, you definitely have, mate. Braden's been with me since the very beginning. The very, 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 very beginning. And yeah, I mean, we were there together through it all. And the days of the first Trump election, I mean, Scotty as well, like I said, you'll remember, it was mental. Yeah, I know. It was a bad start. I know it was a bad start for you, mate. Yeah, I remember it was the same for loads of people who came to the markets around that time. It was a minefield. Yeah, it was. It was an absolute bloody minefield. But it's just not been like that at all this time around, has it? Yeah, and COVID. Yeah, that's it. But yeah, it's just been mental. Yeah, I mean, it's not been mental. That's what I'm trying to say. Sorry, it's not been mental at all. Um, but yeah, next Tuesday. I think it's next Tuesday. Is it next Tuesday? I think it's. I think it's next Tuesday. It's the 5th, isn't it? So yeah, Tuesday. Yeah, Tuesday the 5th. Tuesday the 5th is the election. And I think it's gonna have a crazy impact to the markets. I mean, something like that with that much significance, I will say, and I have already previously said, it's a blanket ban on trading. It's a blanket ban on trading. You know, if you're not, if you haven't been around the block, and you haven't experienced one of these things before, just don't trade. I do think it's very, very good to monitor the markets. I think it's really good to be present in the markets, but I don't think it's a good idea trading. Because I'm not going to say that you will, but you may see some extremely wild swings. I'm talking about, 200, 300 pip moves that your brokers will not be able to trigger your stop losses in time, and you will suffer the slippage consequences that will wipe you out. And so, and also another thing as well that other retail traders oversee, is or don't see oversee. Sorry, I don't know what I was talking about there. Things that retail traders miss are the spreads on events like that. Brokers will increase the spreads to protect themselves wildly. I mean, significantly more so than you would find during an interest rate decision. 3, 4, 5 times more. So you will see the spreads, even on FX pairs, you may see the spreads that on brokers that advertise zero spreads. You may even see the spreads on those increase crazily. Because the brokers have to protect themselves. They're a business at the end of the day, and they have to protect themselves. So, it just gets really hairy. It just gets really, really dicey. Yeah, and well, it's not for that. I'm not on the broker side, mate. So I can't say exactly when, or or how that will happen. But there will be periods of times. Let's say, for example, let me give you a let me give you a hypothetical here to run with. Let's say, for example, that Trump, God forbid, let's say that Trump wins and he's giving speeches and stuff's going on throughout the day. There may not be a spread increase for 24 hours throughout that day because of it, but you could be in a trade and there could be wild spreads for 15 minutes here, an hour there, 2 hours there, 15 minutes there, 80 minutes there or whatever, and it will be sporadic like that throughout the day. And people will be getting knocked out of things left, right, and center. So I'm not saying, I'm just advising that a blanket ban on trading for the Tuesday is advisable. If you, like I say, if you want to go for it, then I'm not literally. I like running this place like we're a team and we're that's the kind of mentality I want people to be in. But the bottom line is you are in control of your own accounts at the end of the day. And you don't work for a firm. Your firm is your own firm. You are your own boss in this game, and so you have to make the decision yourself. But I think I would be a bad representative, a bad professional if I wouldn't be a professional. Enough said. All right, I wouldn't be a professional if I was saying go straight in, trade is normal. And it's another normal trading day. There might not be anything that happens at all. It might be completely dead. I have no idea, but that's the thing. Nobody knows. I remember January 3rd, 2020, or 2019, I can't remember when bloody hell it was, 2019, 2020. I remember members in the trading room then got caught out on the wrong side of a bloody January flash crash that ended most of their careers. I know a guy in particular who was in our trading room, who I still speak to this day, that lost the best part of 28 grand. And he's not a wealthy man. I mean, he's, that 28,000 really was his life savings. And after he lost that in the GA, that was it, man. He went through a real bad period. I mean, it was really dicey for a year for him. It was really bad. And he wasn't leveraged. He was under the correct risk rules. I saw the trade. He was really on point with it. But the market moved in such a volatile way, the broker didn't stop him out, where his stop loss was placed for his designated level of risk, and it took his account. Took the whole thing. So I'm not saying, at the end of the day, there's going to be a lot of people participating in the markets, and the nature of a flash crash. Flash crashes happen because of limited liquidity. So it only takes a few big players instead of many big players to move the market a ridiculous, insane amount. So of course, a flash crash is not what I'm predicting is going to happen next Tuesday. But if you have something, a world superpower that controls a drastic portion of the financial markets that we love and trade every day, that's going to be a pretty big thing, isn't it? The markets could move like that, and it's just safer to be out. It is. Live to trade another day. Live to trade the next day. I mean, let's have a look at the polls quickly. I don't even know what's going on, to be honest. Okay. So it's a very small lead. No, it doesn't help highlight some differences between the states, but it's important to note that there are fewer state polls, national polls, so we have a list early on. Every poll has a margin of error. That means the numbers could be higher or lower. The lead has changed hands a few times since the start of August. 3 states, Michigan, Pennsylvania, blah, blah, blah. Yeah. I mean, it's close at the moment. At this stage, either of them could get it. I don't think there's any clear chance of one or the other getting it at the moment. Which is really scary, I've got to be honest. That's bloody terrifying. Oh man, I can't believe there could be the potential for a round 2 of said person. But anyway, I'll leave it there. I'm not getting into politics. And sorry if you to apologise if you're a real big fan of said person. Anyway, markets. So, guys, I realised with other things that we've been covering today, we're actually running really behind schedule. So, in actual fact, I mean, we literally got 19 minutes. I'm going to do the stocks. I'm going to do the stocks first today, actually. And I'm going to get the stocks done and dusted for you all. And then what we'll do tomorrow is we'll just have a dedicated session in the FX markets and we'll get all of those out. We'll get all those out before the stocks. As I know I've covered a few more things that I wouldn't usually on a Monday today, so that's fine. Okay, cool. So that's all last week's junk. Last week was harsh, by the way, guys. Even on Friday, it was 2 wins and a loss or something like that, or a win and a loss in the Dow. It was really, really dicey. We had a couple of good days. Did a 1.6 day, did a 1.02 day. But then we did a -1% day. We did a 0.2% plus day as well. So it was really, really mixed. We still ended up the week. We still ended up in the for the week, but it wasn't great. Definitely not great. Okay, so today's stock markets then. Monday, we are looking at a breaker structure above there, which is quite tidy actually. I would say I quite like that one. So that's a clean breaker structure point. I won't be going to the very high up here because that's too greedy and too optimistic for a Monday breakout. But I would be happy taking a long to this area in here. And I'm actually really happy with that setup. That's a nice setup to think about in there. So breaker structure trade straight the way up to 42.51. That would be the day done for me. For the short in the Dow Jones, we're going to be looking at that breaker structure and then taking the market back down to this area here. So pretty decent trading parameters today, I've got to be honest. If we go down to the 1 minute time frame, we're looking at the breaker structure point sort of in there, I would say. Probably going to see the structural point form and then break above this area. So then your trade idea is going to have a very nice risk reward, I should imagine, today on this one. Really nice target profit up there. Decent entry. Stop loss doesn't even need to be anywhere below this point. So that's going to be a 1 to 3.1. Really, really solid start to the day for the Dow Jones. For the short, it's going to be just as good because we're looking at the breaker structure level. What are we actually? Yeah, it's got to be in there, doesn't it? Yeah, that's the one. So the breaker structure level for the Dow Jones is going to be through here. I'm going to need to have that just a touch lower, am I? Yeah, just there. So that's going to be the breaker structure for the short in the Dow Jones, which means we've then got a trading margin down to this area, which is quite decent before we run the risk. And entry, target profit, and of course the stop loss, which is going to be situated there. And that's going to be a 1 to 3.4. Approximately. Obviously, you have to account for anything that may happen or something. Take off 0.3 for those differentials, and you've probably got a 1 to 2.8 and a 1 to 3.0 for your potential trades in the Dow Jones today. No man's land is situated between these two areas. Hopefully, the market stays in between them by the point that the market opens up. If the market decides to break a structural point before the market open this afternoon, then you just have to do your best to look at the most recent breaker structure point that comes up next to get into the trade. But this is looking really good. Love the Dow. NAS 100. Right, let's go back up to the anchor chart here. NAS 100, not so good, actually. Not quite as good as our Dow partner. We've got the high point up there, which is not too far away from where price action is at the moment. And we've got the low down here, which is kind of your trading margin. But then we have this turning point, which comes from nowhere there as well. Yeah, I'm not a fan of the NAS 100 actually at all. Because this is, I mean, there's a massive inflection point in here as well. And if I drag that one across to the right, that literally has no effect whatsoever. Price action is just sailing through it. Piece of cake. So I think this is what I'm going to do. Okay, what I'm going to do is that's going to be the breaker structure for a NAS short. And this is going to be the target profit. So that's going to be the trade idea. Now, this is actually a really nice trade. As for the longs, there are no longs. So no longs whatsoever on top, but we do like the short. So then if we go down to our 1 minute time frame here, this is quite a big jump. Okay, on a 1 minute time frame. This is pretty significant. So if you think from where the NAS is trading right now, it's going to be a big fall down there. But look at how much the NAS has climbed today. 0.9% day for the NAS. So that's a really hefty trading day considering we're not even at 130 yet. We've got about 13 minutes to go. So if I look at a breaker structure point in there, target profit's going to be down here. Stop loss at the 50% point between these two zones. We're looking at a 1 to 3.25. So again, another really healthy risk reward ratio. And in doing so, we clear out all of the noise. We don't have to worry about any of this noise. We are simply looking for this or this. Yeah, okay, I had a bit of noise in between, but these trades wouldn't have been a loss. I don't know if that one would have been a loss. Possibly it might have been a loss. But none of these, I don't think. Yeah, maybe that might have been a loss, possibly. But most of them would have been successes. Success, failure, success. So, yeah, I think that's going to be the one. That's going to be the one for me. Okay? So we've only got a short available in the NAS 100. And we have a long and a short available in the US 30 Dow Jones. And that, ladies and gentlemen, is where we are for the day. So, before I wrap things up there, guys, do you have any questions? Anything you need to know before I get out of here? Because I, for one, need to go and grab my afternoon coffee as well and get ready for it. All good. Excellent. Anyone else? Questions? All good? Nadia, all good? Yep. Excellent. Great stuff, guys. Okay, well, I'm going to wrap things up there then. Hope you've enjoyed the session this morning. We will, like I said, get on tomorrow for a full FX breakdown and get ready for our FX stuff as well. Take care out there today, guys. It is a Monday after all, so don't go and overtrade or just, throw it all in the basket for a Monday afternoon. And wish you the best of luck. So have a great day. Take care, team, and I'll see you then. Cheers. Bye-bye.